Hi, everyone. It's Kali Persall, editor of Institutional Investing in Infrastructure, here with Scobie Mackay, the CEO of Imperative, to discuss the market for carbon projects. Scobie, can you just kick us off with a brief introduction of yourself before we get into some questions?
Sure, yeah. So I'm the CEO of Imperative. I have a background in structured commodity work and then helped to set up the voluntary carbon business at Macquarie, where I was before Imperative. In the course of doing that, it became really apparent to me and my co-founders that there was a big gap in the market in terms of project development organizations that were capable of delivering infrastructure grade, nature-based solutions projects. And that's really the market gap that we're trying to address.
Great, and thank you so much for taking the time to be here. I understand Imperative, like you said, sort of approaches its projects as nature infrastructure, and that the company utilizes the voluntary carbon market as well. Can you just sort of define nature infrastructure for us and kind of talk about how it relates to the carbon markets? Just explain that connection a little bit more.
Yeah, we see nature infrastructure as an emerging asset class. And really, what that means for us, particularly imperative at the moment, is nature restoration. So, large scale, pure play, native species ecosystem restoration projects funded via the carbon market. And when we say nature infrastructure, I suppose that has a few implications. One is we are trying to do these projects to a level of professionalism and rigor and discipline that you would expect to see in a major infrastructure project in another more mature asset class. And the second is when we think about the dual crises that we have on our hands of both climate and biodiversity loss, we see large scale ecosystem restoration projects as being critical infrastructure, like we would see dams or roads or other pieces of critical infrastructure as we look to a more sustainable future.
In terms of the carbon markets, there seems to be a lot of noise, particularly from a quality perspective right now. Are there any sort of misconceptions you want to put to rest, or just talk about how investors should be thinking about the market?
Yeah, I think like all things, some of the noise around quality is warranted and some of it is probably overstated. What we are trying to do is to fundamentally address quality at the core, at the root cause, which is by having boots on the ground, highly professionalized project delivery and operations capabilities, because that's where we see the real gap. If we want high quality projects and high quality assets that have a 40 or even 100-year lifespan, we need to treat these assets like we would any other serious asset class and have highly professionalized teams on the ground that are capable of both developing the asset and then optimizing and managing the asset for the duration of the asset's life. Now, that sort of language and approach hasn't been used very widely historically in the carbon markets. And part of the reason for that is that there hasn't been a lot of capital around to fund large scale projects. And so these haven't been done to an infrastructure grade of quality or scale. The other challenge, which is not a market maturity challenge, it's an inherent challenge in the asset class, is that these projects inherently have to be done with due respect for Indigenous peoples and local communities and other stakeholders, and the importance of getting that stakeholder engagement and stakeholder ownership and involvement in the projects right is heightened versus other asset classes. That is something that is inherently one of the challenges with doing these projects very well is they have to be done to an infrastructure grade of quality in terms of project execution, technology, predictability of delivery, scheduling, costs, etc., in a manner that respects the interests of those local stakeholders and is fair and equitable and defensible to the market.
Yeah, well, thank you for explaining that a little bit more. Just looking ahead, sort of where do we go from here? Where do you see this market evolving, and what are some of the opportunities for that institutional investment to come in?
Our aspiration is that we can really show the market how good projects can be done in this space. We see the voluntary carbon market and indeed global international carbon markets as being a critical financing source for projects that need to happen if we're going to avert climate and biodiversity catastrophe. So I think we aspire to work with the developer ecosystem to really show that these projects can be rendered into an investable asset class and to crowd in more affordable and larger scale financing and to really create the sort of predictability and investability that large institutional investors need to show to their investment committees and their stakeholders. We believe that that can be done. There will inherently be residual risks that people have to understand. Emerging market infrastructure in any asset class has particular risks that need to be taken into account. And as we collectively work to scale up this asset class, we are learning along the way about the sort of idiosyncratic risks that are faced by nature projects. There will be some learnings along the way, but we are very confident that we can demonstrate the level of professionalism and investability and risk mitigation that will be required to really crowd in institutional capital. It's going to be a multi-year process, and we shouldn't kid ourselves that there is a journey here that we all have to go on. But we really do believe that it can be done, and we are making progress towards a more investable market.